All right, what's up, Tycoon? Super excited for today's video. Gonna give you guys another VIX update and take a look at the futures real quick first before we do that, okay? And we'll jump straight into that. But previously on one of the times I drew up the futures, right? I drew up these volume gaps here. Okay, we're looking at the volume profile here, which down here, this shows you volume by time, right? So you can see the volume any particular day or week or hour or minute, just depending on what time frame you're on. And when you use the volume profile, you can actually see the volume by price, right? And what we have here are these two volume gaps. Okay, these are areas where prices are typically going to move quickly through, right? And we're looking at the weekly chart here. So we can see here that we came close to this volume gap down here. Okay. But what do you know? Okay. The buyer stepped in, right? We have all this volume here. Okay. And bulls said, you ain't coming down through here. The reason these volume gaps are important is because these are areas where the stock price tends to quickly move. All right. What the stocks like to do is they like to move from high volume node to high volume node. Okay. So, here is our high volume nodes, and our next high volume nodes above, okay, is going to be right around 4,200 on the /ES, right? This is why a lot of people are thinking, all right, that maybe the S&P 500, the SPY, could possibly rally into 410 or 420, right? And the reason being is, we're in this very low volume area right now. Okay. So, we're looking at the volume gaps and we're seeing that, we're currently in one of them, right? It'll be very easy to either push the price up quickly through these or get rejected and stay in the high volume nodes and head back lower and consolidate in this area. We do have FOMC coming up next week. But strangely enough, last CPI report, we rallied really hard and it was worse than expected. Okay. So it's been a real roller coaster in the market lately. But when you're looking at the technicals and then just staying up to date with the market context, right? It really helps you out. Okay. So, that's why I'm looking at this currently. All right. We kind of are in, still this bearish channel. All right. And I kind of showed, last time we were going to bounce off of here and then rally up and possibly face a rejection here. Okay. So honestly, that's what I'm looking at. I'm going to look to see, are we going to move through this high volume node? Or through this volume gap up to our high volume nodes right around 410, 4100 all the way up to 4,200. That's what I'd like to see for a bullish market to continue. Okay. And the VIX is giving us some signs that we may continue this. All right. We'll actually go to the daily chart now. And I want to show you guys one last thing on the daily chart. Okay. Because we faced some resistance here today. All right. And, this was our daily chart trend line. Okay. So we have, on the daily, we have 1, 2, 3, 4 touches here. Okay, 5. We hit the resistance on it yesterday, and today we were able to come up and wick above it, but really, face resistance there, right? So I'm going to be looking to see, right? Are we going to be able to break this daily trend line and then keep heading further? If we do, that's a very, very bullish sign. Okay, we do have a nice weekly candlestick, that we're closing on. All right, pretty bullish. If you ask me, it's not the most bullish weekly candle ever, but still a nice bullish weekly candle. Again, we faces our resistance right at that trend line. So really, this supply zone here of about 39.85 down to 39.63. I did short the market a little bit today. And was able to do some nice things and recover some losses, as the market pulled back. But, this is our really supply zone that we need to, flip from supply zone into a demand and push up further into this next zone over here, right around 40.50 to 40.28. All right. But the first thing we have to do is break this daily trend line that I'm watching. Okay. So this is going to be the main trend line that I'm really watching right now. We'll go ahead and pull up the VIX now. Okay, and look at that, because I know that's what you guys are here for in this video, right? And we're gonna break it down really, really well. Okay, so again, I kind of start off all the videos by doing this. When we had the Fed meeting and the rate hikes and all of that stuff, and when we saw the biggest drops in the market is when VIX, okay, went up to $30 to $34. All right, and this is continued to be the pattern, right? So there's nothing saying that we won't see that pattern again, and that VIX could skyrocket back up to 30 to 34 around FOMC. But I'm not personally betting on that to happen right away. we have been getting some nice bullish signs, and I'm going to continue trying to ride the bullish momentum until until it's over. All right, so we are finding a little bit of support on the VIX right around 23, 28. We actually closed below it today and flipped it to resistance, but I do think that there is a possibility we could see VIX skyrocket up to $30 or $34 again soon. So sometime next week, right? If VIX keeps dropping below $23, I'll be looking to add, some VIX call options just in case on FOMC the VIX skyrockets, right? And of course, if VIX skyrockets up, a lot of times that's going to bring the stock market down. The best time so far this year, every single time, the time to go long has been when VIX is up here at 30 to 34, right? Each time we do that, the VIX end up dropping all the way down to 23. We did it again, dropped all the way down to 23. Last time we did it, it dropped all the way down to 18. Um, so that's really kind of the main thing. And really when you want to go long in the market again, right? The volatility index, the VIX, is sometimes known as the fear index, right? And you want to buy when fear is really high in the market. Okay. And these are our fear levels for the Fed meeting and rate hikes is 30 to 34, and we have peak fear is going to be above 38.94. Okay. That's going to be our like peak fear for the entire stock market, right? If VIX is above 38.94 or hitting 38.94, then you can expect some much bigger problems in your life and in the stock market than just the VIX going up, right? It'll probably be a complete bloodbath if that is the case. All right, but we'll break it down and I'll just show you guys how we keep getting bullish signs after bullish signs after bullish signs on the VIX. Okay. So we have the main support and resistance levels on here. All right. And what I mean by bullish sign is a rejection at one of our resistance levels. Okay. That's what we're looking for. All right. So we go over like this week's of trading. Okay, this is Monday. All right, we see Monday. We're down here, and there's a nice pop in VIX. Okay, we find some support right around 24.49, and then it pops up here, faces a little bit of resistance at 25.47, and then this is really where we get our resistance at 25.72. Right. So when you see VIX coming up here and making these wicks, and then reversing, that's your sign to go bullish on the S&P 500 or something else like that, right? Because if VIX is going to get rejected here, it's going to drop, and that's going to cause the actual stock market to go upwards. Okay, the S&P 500 is what I'm speaking of, right? So this is pretty much how I day trade and swing trade the SPY call options every day, right? As I wait for the S&P 500 to drop to a support level, and I wait for VIX to hit a resistance level, right? And once I see that we're at a resistance level and the price action is not strong, and it's giving us a sign, okay, well, hey, we just flipped this 25.72 to resistance again, and then we ended up closing below the 25.47. We continue that trend, right? Find support again at the 24.49 level, flip that to resistance, close below it, right? Big, nice puke. Okay, we come up the next day, try to test 24.49 again, get rejected there again, and drop even lower to our next support level at 23.28. All right. Well, what do you know? Again, today, all right, we flipped it to resistance. We dropped, all right, and the SPY made highs on the day here at the open of the day, okay, but then it quickly reversed. We started trading above it, but look at these. These are wicks, okay? This is not strong price action. So what that means is that the volatility index was just doing its normal thing, being extremely volatile, spiking really hard, all right, but then we actually come here and close below, all right? So, this is what I mean by signs in the market, okay? You can see here, when it flips these levels to resistance, that's a sign that we're still bullish in the market, right? And that's what we did today. We closed below this level yesterday, all right, and we were able to close below this level again today, all right. So that's what we're looking for. That's what we want to see continue, is for the VIX to keep flipping its resistance in keep getting rejected at these resistance lines. Okay, that's what I'm trying to say. So our next level below 23.28 is going to be 22.01, then 20.95, and below that I have 18.45. All right. So I really like to look at the 1 hour chart intraday to try to see when we are getting these rejections. All right. And if you see a nice rejection, on the VIX on a 1 hour chart, okay, then you can look to possibly get into some bullish positions on the SPY intraday and try to take some quick profits on those. That's definitely my favorite thing to do. I had multiple 100% trades this week on the S&P 500. I had a 100% trade 200% trade, and a 300% trade. Okay. Just today, at the very end of the day, in the last like 15 minutes of the market, I was able to get 126% on some, 0 days to expiration call options, right? That's what really helped my account out today. With the big pullback, I had so many bullish positions everywhere. And, I think I was down a decent amount, like 10% of my account overall. So I went ahead and said, all right, well, I need to make some of that money back. I had a nice sign of rejection here on VIX, and and as VIX dropped throughout the rest of the day, I rode that bullish momentum on the SPY for the rest of the day. All right. So thank you guys for watching. Don't forget to like, comment, subscribe, and I'm out.